Welcome back to Market on Close. I'm Caroline Woods. Joining me here now on the floor of the stock exchange is Dryden Pence, Chief Investment Officer at Pence Capital Management. Dryden, great to have you here.
Great to be here, Caroline. Thank you for having me.
Thanks for wrapping up the show with me. So we, of course, had another down day, a second day in a row here, but we had quite an impressive winning streak for the S&P 500. It's only May 6th, but if you take a look, stock's still higher for the month of May. Do you think it's easier to make the case that this is a market that moves higher or lower from here?
I think the market moves higher from here. I think we've seen that the tariff tantrum is somewhat over. Now we're moving into an environment where the facts are going to begin to take over, deals will begin to happen, and people will have math certainty. Because this whole thing is about tariffs and taxes. It's two parts of a policy. So tariffs are a tax increase, and then tax cuts are a tax decrease. And so the question is, are the tariffs going to be more restrictive to the economy than the future tax cuts will be stimulative?
So what's the answer to that question? Will those tax cuts offset the impact of tariffs, which we still don't really know what that's going to be?
And that's part of the problem. I mean, though you have a framework in both the House and Senate of the bills, but we don't know the exact amount of tax cuts. So getting some clarity over the next 10 to 30 days will make a big difference. But I think people forget that the fundamentals of the American economy are still very strong. It's humming along, but people don't hear the hum because of all the noise and hyperbole that's going on.
So you're not in the recession camp?
No, I'm not. I'm not in the recession camp. And the big thing is, we've added 7.1 million people to the labor force since the peak of the pandemic. We've grown. It's bigger than the total labor force of Illinois. We've grown 2.1 or almost 3.1 trillion dollars. So we've grown the equivalent of the GDP of France in the last 4 years. You had that many people working, making more money than people have ever made before, higher labor productivity than ever before, and you've grown this much. Very hard to have a recession, I think.
Okay, so to your point, though, we don't know actually the details of any tax cuts, and we don't know what these tariffs are ultimately going to look like. So this is a market that can move higher, assuming what on the tariff front? Because right now we only really know how the market reacts to tariff uncertainty.
Exactly. So I think what's going to happen is, as you begin to get deals don't stay undone forever, right? And we're 180 days from 365 days from the midterm. So the administration's got to hurry up and get stuff done so people can feel it before the midterm elections. So I think that we probably are in this period of about 90 days where we're going to begin to see the major trading agreements begin to happen. It's really, 75% of our trade is the European Union and 7 other countries. So you've got those big games beginning to happen now, and you begin to probably see one every 5 or 10 days over this period of time. And every time you get a deal, certainty goes away. And as certainty goes away, uncertainty goes away, and as certainty comes in, you're going to see the market probably begin to move higher because people can do the math. They can see what's going on. And I think that we're going to be moving beyond this uncertain period over the next 90 days, and that's going to be positive for markets. And I don't think we're going to have a recession.
But over the next 90 days, what? Buckle your seatbelt?
You have to be prepared to be a little uncomfortable.
Okay.
From moment to moment, you have to be prepared to be a little uncomfortable. But I think the worst part of part of the question for everybody is the worst part of the news over, and I think that the tariff tantrum is over, and now we're moving into a more fundamental view of what's going on in the economy. Earnings are going to drive this, and the predictions about earnings, but I don't think we see a big pullback in the U.S. economy. There's just not that much bad news out there.
You mentioned earnings. We've already heard from Meta. Shares were down about 2% today, but actually have inched higher after earnings and are now positive year to date, up about 0.3%. So still a far way from the highs, about 20% from the highs. Tell us why you like Meta and you'd be comfortable getting in right now.
Sure. And the point on Meta is, like so many of the other technology companies, they're involved in so much of the base infrastructure of what we're doing in the future with regard to AI, this next wave of innovation of the American economy. And then also, going back to the tariff thing, is 44% of their revenues are inside the United States. They're fairly insulated from a lot of if this uncertainty is there, they're fairly insulated from it. So we like companies that are that way because we think that they probably have been unjustly beat up and this gives you one an opportunity.
What about Nvidia? That's been beat up. Shares down 15% year to date. Hasn't reported earnings yet. Would you buy before hearing from Nvidia?
I think, and it depends on the individual account and how somebody's, how aggressive someone is. But now you've got Nvidia back to a PE that's around 25 when it was, used to be a lot higher. And now you have a situation where still the major customers of Nvidia, you've got Microsoft and you've got Meta, you've got all of these things. These major customers are not backing off, right, on their CapEx spending. So the thing that's been driving Nvidia have been the major spending of like Microsoft and all these other guys in terms of their CapEx spending. That's not slowing down because we're still building out the infrastructure of AI. And if that's the case, then you have a long-term demand for Nvidia's product.
Well, we've been wondering when AMD is going to catch up. We're seeing AMD higher after hours because of earnings, not seeing any weakness in Nvidia because of it. So we'll see if there's any commentary on that. 30 seconds on why you also like Salesforce.
One big reason is because with 66% of its revenue inside the United States, it's insulated from a lot of this trade worry, of the tariff worry, so it's probably been unjustly discounted at this moment. So one, it's a price issue, but beyond that is they are dominant when it comes to CRM. And we like dominant players that really change the nature of labor productivity. And they're continuing to do that not only in the United States, but globally. So I think when you take a look at a company that's dominant in increasing labor productivity, we like that for the long term.
All right, we appreciate those three picks. Dryden, thanks so much for joining us.
Absolutely, thank you for having me here.
That's Dryden Pence, Pence Capital Management, and thank you for joining us on Market on Close. Market Overtime is coming up next. Stay tuned.